Hello, welcome to the stock market weekend review. It is Sunday, April 16, 2023. A slow week in that the market didn't do a heck of a lot. It went up and then it went down. Earnings season is afoot. First up, let's take a look real quick at TLT. Uh, it is trading in the range I think is worth buying for those that want position in TLT. It is resting uh, near the 100 MA. Can it go lower into the 50 MA? Absolutely. I will keep adding. I had a bunch of puts assigned to me because I sold put from 107 down to 105. I have three puts that was assigned, and I'm fine with adding those share. The average cost is below 106, so I'm not that deep in red as far as those 300 shares. It's the same 300 share that got assigned the week before uh, when it was over 108. 2 weeks ago, I mean, not the week before. 2 weeks ago, on this big run up, I had three cover calls that was assigned between 107.5 and 108. So I was fine with buying them back, basically $2 cheaper per share. I also sold some puts below 104, 104.5. I did. Depending on what's going on with TLT next week. For me, for those that are skittish on selling naked puts too close to the danger zone here of 104, 104.5, the gap fill is a very good spot. On previous dump of TLT, on this one, when TLT came down to uh, the 100 MA, that's what I did. I sold put at 103, 102.5 down here. So yes, I will do exactly the same thing should TLT test the 50 MA, okay? Then selling a put at 102.5 is an easy decision to do. So for me, nothing to worry about. It's trading within the range. It's usually, buy something at the low range, have a lower risk, high reward thing, than buy at the top of the range. Where's the top of the range? For now, TLT, the top of the range is 108, right? For those that follow me for quite some time, each and every time the TLT is at the 108-ish, I said, take some profit. 4 times now. It's been very clear over the past 6 months, okay? If you set on your hand, each and every time it is 108 and above, you should feel extra foolish. It's well telegraphed. VIX, danger zone. Okay, this is wow. All right, the last time we were here, not pretty. Take a look on February, February 2nd. Now we are near that low of the year, February 2nd. So let's take a look at the SPY. Where was SPY back in February 2nd? You want to look? Right there. Okay? And is it a surprise that the SPY is also near the exact same level it was on February 2nd? No, it's not random. Okay? That is why people talk about the VIX. There is a high correlation of the direction of the market with the VIX. All right? So you see it right here. And now that we're exactly inches away from matching the low of the VIX, guess what? The SPY is right there. So I can't stress enough, be careful. If you have money in the market, especially equity, take some profit. On any pop, trim some. 5%, 10%, do something. Do nothing can give you one of these, right? When the SPY go from 413, 414, all the way down to 380, Do you want that? No, nobody want to give back this move. It's ugly. It's 8%. Okay, no, no need to give back 8% of anything. QQQ. Wow. Okay, QQQ is above the February 2nd, right? So yeah, danger zone. Okay, danger zone. Profit taking, raise your stop. Speaking of raise my stop, I have not sold any Meta in quite some time, but I did raise my stop. I will raise my stop before the market open on Monday. Where? At the least, as of right now, my stop is, um, I believe, 210.66. I will raise it to 212.58. Right, in this area right here, I will raise my stop. I think raising it to the low of day um, Thursday or Friday is too close, right? On any wick down, those shares can get pulled away. But for me, I'll raise it to 212.58, and then I put another buy order at 209. So any kind of dump action that go below, I will lose the share, but then I will buy them back roughly $3 below, right? I'm fine with saving $3 on my shares. Buy them all back. So for now, raise your stop. Google, looking good here, but key spot, right? Key spot. This is, if you take a look at this area right here, it was, as always, I talk about support and resistance. Sometimes it's just not a price. Sometimes it's a zone, okay? And this is a perfect example of a zone. Let me draw something here, if I can. Let me do something. Let's draw a zone. Draw, add drawing. Hopefully it makes sense. There you go. Okay, it's a zone. Bounce, bounce, fail, resistance, resistance, resistance. We are in the zone, right? What to do with my Google share? I have my stop right now. My stop is a 20 MA. It's close enough. I'm gonna raise it. It was the 20 MA as of Wednesday. I have not raised it Thursday or Friday, but pre-market open Monday, I'm raising it to 104.17. I have a lot of Google. Okay, well, 400 share, is that enough? But for me, it is enough. That is a lot to put in one stock. So I would be okay to set my stop right there. Should it violate the zone? It's a good area because if it violates this zone because it's a sell up in the NASDAQ, surely we can go way below. Would I put a stop on all 400 shares? I don't know. Most likely it will be half of my share. Okay, so it's in the money. My Google share are in profit, so at least half my share should be in a stop right there at the bottom range of the zone should we violate the zone. Microsoft, I talk about it's time to go. Here, the risk reward is lower. So if you have it, set your stop. Use a 20 MA, right? Because it's a long distance from 281 to 82 to 267. You don't want that, okay? You don't want that. Trust me, you do not want to give back that kind of gain. It can happen. You don't want that. Look, the last time on earning, it did good. It ran up near resistance and then it sell off significantly. And now we are at the top range, all right? So raise your stop. I can't stress enough. You can apply that to just about every tech stock. Okay, if you have it, like Apple, raise your stop. Use a 20 MA. Okay, use a 20 MA because the path of least resistance for many tech stock is lower. lower. Speaking of tech, how about Tesla? I have been selling put spread on Tesla for quite a few weeks. Been successful. Uh, right now, I think I wrote about 3 to 4 put spread every week for the past 2 months. I would do exactly the same thing. I already wrote a couple for this Friday coming up. Where? Down here. 167.5, 165. So I've been writing 167.5, 155 put spread down here because I'm using this reference low as well as the 100 MA as my protection. Okay, so would I sell 170? That's too close for comfort, right? I did have a 170, 155 put spread last week. It expired worthless, but still, it's too close for comfort. Where we're in the top range of the NASDAQ, then we can see a 5% correction in any moment this week or in the next few weeks. So no need to take higher risk. So for me, I'm selling put spread way below. So to me, even 165 and below is even safer than using 167.5. But for me, at least up there is about as close as I want to be to the 100 MA. It is sloping downward. So that's not, it's flatlining, okay? It's flatlining, so it's not a bad thing, but it's still not all that bullish as far as Tesla. No need to chase the share, sell puts. Easier to make money that way, in my opinion. All right, let's take a look at banks. Banks of America, decent sympathy move with JPM. I have not sold any of my Bank of America, and that's fine. I'm keeping them up here. I will. If it get into this zone, you betcha. In fact, let's remove this drawing. Okay, yeah, for me, up here, it's basically the last area where it could be resistant. You know, like I said, what was support before can be resistant. So the first area of trim for Bank of America is there. Can it move much higher? We'll see. But I'm not worried about Bank of America. JPM, what a move. Okay, so impressive. But what? It's time to trim. We are literally 5% from the top range, right? So can you get another 5% in this move? Sure. If you have it, for sure, set a sell order in the 144-ish area when it hit the 52-week high zone, right? It's not time to be greedy. Look, it's been in that zone 3 times in the past 3 months, right? Look, set yourself up there for sure and use the 50 as your stop, either the 50 or 100. That's your hard stop. Okay, if you have JPM, that would be a hard stop, because if that fail, you can see the 200 MA pretty quickly. For me, I don't have anything in JPM, but if I see a hard sell, selling put at 125 is a no-brainer for me. Sell us put spread or outright naked put at 125 is a no-brainer, because I think this zone right here is well-defined support for JPM. Okay, so if you don't have JPM and you want to get into it, keep your eyes on 125. That's the area that I would be buying. KRE, I was tempted to add on the dump Friday. I did not trim any position. It's a small position. I have literally 10 times more Bank of America compared to KRE. So it's not a huge position. Would I add to it if it keep going sideways? Yeah, it's the 20 MA is stop crashing. It's gonna start to level out, and I think the more earning coming out in the next 2 weeks, and the more confident that the market think the worst news is behind. For I think here's my take. The reason why KRE has not bounced as hard compared to say Bank of America, Goldman Sachs, or say JP Morgan is the Fed. The Fed can still raise by another quarter point, right? The Fed prior to the banking crisis was hell-bent on raising the Fed fund rate to 5%. And then they raised that target to even higher. They talk about 5% for much of the first 9 months of last year. And then the last 3 months of last year, as inflation was not cooling fast enough, they raised the Fed fund target rate to something like 5.3, 5.6%. But with what happened in the last 2 months, they have cooled off, right? They have raised by, they talk about pausing, they hint about pausing. But if they feel confident that raising another quarter point in May, early May, is not going to crash the market or hurt any more banks, they will. As much as I like to see the Fed pause, I do believe they are looking at weekly data to see if it's possible to raise it one more time. And if they do that, then we need to pay attention to regional banks to see if any more banks will run into any more problems, because every time they raise rate, it hurt their balance sheet. That's what happened. Okay, so this is why KRE is still not completely out of danger zone, because there could be another regional banks that could face a problem if the Fed raised by another quarter point. I'm sure the Fed is doing a lot of homework right now to make sure that they can do that without causing systematic risk to the market. But if they do raise by a quarter point, I think that will be the last of the Fed raise. And everything I just said in the last 3 minutes have a lot to do why TLT is weaker last week, because the market is starting to bake in that the Fed is not done raising yet. Okay. Speaking of Goldman Sachs, let's take a look. Looking good. Okay, but I trimmed some, and so should everybody. It's at the zone that you should trim. I would trim the rest probably up here. All right. I would trim into 341, and I would trim into 350. And my goal is probably to exit completely there. But for now, would I add? Probably not. But if there is any kind of pullback in the banks, I will sell put spread where? 320, 310, 310, 300 down here. I feel pretty good, especially there's a gap fill right here. There's a gap fill around 313-ish. So for me, doing a 310, 300 or 310, 295 put spread, if there's juice down there, it's easy. So if there's a pullback into the 20 MA, that's where I would sell put spread and perhaps add back some share that I sold up here. Okay, so yeah, that's my take on Goldman Sachs. Take a look at healthcare, UNH. I said it Wednesday. I talked about it last weekend. You had to sell into resistance. That's what we got, right? For those that did it, good on you. I took this dump right here to sell a few put spread. I welcome the opportunity to return to the scene of the crime. So I sold one. I will step up if there's more weakness into this sector this week. I will be selling more put spread where? 490, 490, 480, 490, 475. and if it's a further weakness, 475, 460. Okay, so yes, I do plan to layer in at least 2 or 3 more UNH put spread should there is further weakness into the 100 MA, because I think that's the zone where I won't be outright buying share. I would be outright buying share closer to the 20 MA. Okay, for me, that's a better spot to buy share. It's a better spot to sell put below the 20 MA, right? So for now, the put spread that I sell is below the 20 MA, just below it. ELV, same thing. I talk about it's time to go. And if you didn't listen, not sure what else to tell you. For me, outright buying share, 470. Where would I sell put spread? 465. Okay, 465, 460. There's a gap fill down here in 460. So for me, the easiest put spread to sell for ELV is 460, 440. I have done that many times. Occasionally, it was in danger zone, but 460, 440, and then 455, 450, 430. Those put spread has worked very well this past year. No need to chase share here. You know, I would not add any share unless I see 470-ish. That would be the spot that will outright buy some share, but at the same time, I will be selling put spread in the 455, 440 zone or below. Cigna, which I like a little bit more than both ELV and UNH. I exited all of my position. I bought some share. I saw a put spread. It was a winning trade, small winning trade, because I nibble. It was the first time I trade Cigna. I want to see a breakout over this downtrend, right? It's a channel, a down channel that is flirting with, see, look, very clear. We need to see a breakout. If there is a breakout, I think we can see a 5% move easily, right? So if there's a breakout, I would feel more confident selling a put spread, say 255, 245, or even 260, 250. But on pullback, I might add a little share. I might. Okay, if there's low volume sell off into below 260, yeah, I might nibble a few share. It is 259 right now, but if I see anything near, you know, this area here, like 255, outright buying share in low 250s, easy decision. Okay, it's easy decision to buy some share down here. Should it drop down there, it's tougher to buy share here. I'd rather see the breakout to buy into the run than buy up here and then to see a dump down here. So that's my take on Cigna. Let's take a look at pharma. Pfizer looking okay. Surely it would be nice if it was a little bit stronger, but for me, I'm okay right now. Okay, I'm okay with my Pfizer. Not selling anything yet. I think the bigger run is in store. Would I add share? That's an interesting question. I might even add share down here. Might throw in like a few low ball orders in, you know, 40.8, 40.75. Should there is any kind of sector weakness, I might. But for now, I'm okay with Pfizer. JSK, I like a lot. I trim. I talk about trimming at 38.1. Surely I did that on this day. I consider trimming more here, but I did not. I did set a stop. Okay, where's my stop? I put my stop on this day. I use the low of day on Wednesday as my stop, which is 37.65. That's okay. I think I can keep that stop right there because it's very close to the low of Friday. I think keeping a stop there. My stop is on half of my position. So it's too much gain to give back too much, but should it stop out, I would, lose half. Would I buy those share back at 36-ish? Yeah. But for now, that's the play on that. Eli Lilly, wow, what a move. I sold half already of my Eli Lilly. Um, not much to say, it's raise my stop. Where's my stop? Right now, my stop is low of day Thursday on half my share, on half of my remaining share. That is where my stop is. But not chasing here. Keep trimming. It's in the zone of profit taking. Okay, FV surprisingly strong. Okay, earning was nothing special, but I'm very surprised that it's holding up quite well here. Not much to say, but raise your stop. Where? Low of day Thursday would be good, right? If you have it, because there's too much to give. Okay, the 20 MA is too far away. To me, whenever a level of support is literally about 3%, if you want, at the minimum, use that. Okay, but for me, I would rather use something like 160. Ish is my level. Save yourself $2. J&J, nice move, but it's time to go, right? If you had J&J, if you bought into J&J a month ago when I said it's turning, then congratulations, but it's time to go. Take a look. It's time to go. Okay, it wick the 100 MA. See, yeah, it's time to go. If you still have some share, put a sell order there. Put a sell order at 167, right? Use that. Use a 100 MA and a 200 MA above as your sell target to exit completely, because I think it's a lot to ask for J&J to break out above, but for me, that's the place to go. All right, let's move on. Target. I like Target here. I talk about Target for as long as I can remember. I said it's time to buy down here. I said it's time to go up there. Now it's time to buy back into sell put spread. That's what I did. Where would I sell put spread? 155. No brainer. Okay, no brainer. Even 157.5. But on further weakness, I'll be selling 155, 145 put spread. No doubt I'll do that. I like Target here. Walmart. I like it. I didn't like it up here. I like Walmart down here. I talk about it. Up here, no. What would I do? I would hope that you set your stop somewhere along the way to not give back this move from 150 down to 148. I hope you're able to set your stop and get out. Where would I sell my put spread? 145 and below. Okay, use the 20 MA as your protection. It's not a whole lot of juice in Walmart, so if you're trying to sell 140, 142.5, not enough juice. But if you want to do it, at least use use a 20 MA. So 145 would be the highest put you should play there. Costco, I said it's time to go for a while. There's no need to chase it here. Where would I sell Costco put? 475 would be the highest. On weakness, if the 100 MA break, when it broke quite often, right? Look. Okay, so if we break below, there will be juice in 475, 465, even 470. At this point, I'd rather sell it as low as I can. No need to make an extra 20 cents per share. If I can, sell a 472.5 or 470, 450 put spread, even if it's like 25 cents cheaper than selling something 475, why not? Why not? Buy yourself, give up a little profit for much more protection. So that's my take on Costco. LH, it has been time to go for the past week. Just be patient to buy back lower. DGX, same thing. Okay, same thing. We wait until the dump, and then now it's in the area that I have nothing left. I have nothing left on DGX or LH. No reason to be in it. Let's see. Netflix. I'm waiting for further weakness. Where would I like to buy into Netflix? If I see weakness, I definitely would sell put 295, 275 area down here. Can it test that? Yeah. Earning coming up. For sure, I'm not going to do anything with Netflix until near earning day. If usually the premiums on options are very high the day before earning because a lot of people are making big bets. So you see crazy put premiums. When I see that, then if the 280, if the 280, 270, or 280, 260 put spread start to look juicy before earning, that's worth playing because I think there's a lot of you have support. Okay, you have decent support in a low 290-ish range, so I'm okay. Okay, because first of all, if something bad happened with earning, Netflix would slice through. I'm pretty sure all this moving average up here, they're so close together, it would slice right through and go below. It will flirt into the 300 area where I think selling put spread at 275, 250 would be an easy decision to do. So that's my take on Netflix. Let's see, what else would which else had I not touched on? Oh, consumer staple, nothing. I'm out. Okay, to me, it at the high range, right? Like Pepsi, no need to be in here. Can you squeeze another $5 into it? Another 3%, 2%? Yeah, but I don't care to be in anything that the upside is only 2 or 3% and the downside can be bigger. Risk reward is just not there. Same thing with Coke. I've been out. When it's over 63, I was out. All out. The risk reward is lower here. So down here, no brainer, right? We talked about Coke down here. When it was below 60, no brainer. There's 2 months to buy Coke in the 59 and below range. 2 months. And you get your 10%, your 5% move. All right? From if my average cross was below 59, it was easy decision to sell at 63 and get out. Easy. McDonald's, crazy move, but it is at the range that you should sell. You really should sell. Time to go. Not much else to say. Raise your stop. Where should your stop be? At the minimum, your stop should be low of day Thursday. Okay? Don't be greedy. I wouldn't use low of day Friday because that's too close for comfort, but use low of day Thursday. This way, should this give, do you want to give up $20? Do you? Or $15, I mean? No, it's way too much to give, okay? Way too much. Way too much. What else? The one thing that I have not been able to buy back into is Mondelez. Unlike Coke and Pepsi, it did not correct enough. I was waiting down here. I was waiting on the 200 MA to buy. It almost got there on this day, but not enough. And then all my orders for the past 2 months, just too low. It never got there, so I missed this run. But for now, it's a no touch. It's time to go there. Big time, it's time to go. Okay? Let's see. Let's draw something. It's not cheap. Let's see, look. Look at this upward trend. Look at this upward trend. Bang, bang, bang. Not random, okay? It's time to go. I can't say enough. It's time to go on Mondelez. If you have it, congratulations. on the big winning, but it's time to go. Let's end this sector on, well, end this stream, I mean, on a place I like, Martin Marietta. I like, but I trim. Uh, I would likely trim more and exit completely in the 360-ish area. If I see anything above 362, you betcha I'm selling everything. Okay, I don't need to stay in it. It's been a nice, great buy to buy in the low area here on this dump. Stay disciplined, buy at the low edge of the range and sell at the upper range. Like I said, the upper range usually is a zone, okay? It can be both a price, but it can easily be a zone. And this one, you can see the zone clearly, you know, from 370 up there. So I was trimmed into 362 into the bottom range of the zone, and then maybe put order along the way to exit up. But yeah, it's not, I wouldn't add to it. Would I add if I see the 20 MA? Yes. Would I sell puts? Hard to play options here because the volume is so low. But for now, that's it for this week. Be careful, earnings season is here, and you can, for every stock that move like JPM, you have one that move like UNH. UNH have very good earning, right? And what you got? You got a big smash. Those that didn't heed my warning that it's time to go, well, you gave up a lot. So take the lesson. Trim into earning, even if it is good. Okay? At least trim. You don't have to sell everything, but trim some, because for everyone that move like JPM, I think more will move like this. Okay? So because the move, look, prior to earning, it was so good. You had a big ramp from mid 480s to 529. That's crazy. You had a big move before earning. What more do you want? Right? What more do you want? That's it for this week. Thank you for watching.